Good morning, guys. This is Richard Williams Jr. from Profits of Forex, and I wanted to do another video for you guys this morning. I know I did a video previously on the single moving average strategy, on how to use a 20-period moving average to basically, find entries in the market. On a short term in trading, you can use it on higher time frames as well. But moving averages are usually used to really kind of spot near term or short term trends in the market. So I told you in that video that I was going to record another video to kind of try to show another way that you can maybe use another advanced technique or heighten that strategy and become a little bit more precise in that strategy, or using moving averages. So I wanted to record that video today with you guys. Now, before I go any further, like, subscribe, hit the notification button below, comment in the comment section below. Let us know your thoughts, as well as share some of your knowledge and input here. In this community, we want to be able to give back, and that's what we're here to do. So definitely share, give back. You can probably help some of us with what you may know, your perspective in the market. So do share. Head over to Facebook and request your free invite to our free group over there at Profits of Forex group over there on Facebook as well. Join the conversation offline over there. And with that being said, guys, I appreciate you guys tuning in. So let's get right into it. As you can see, I'm on GPB Audi, right? And I have added a 20-pair moving average that we used in the previous video as well. And you can see that, simply that strategy basically went that, whenever the line price breaks above the line, you're buying, right? And you want to retest so you can confirm that, and then it would go up. And then whenever price was to come below that line, you would enter and exit, right? Well, based on that, right, it seems simple enough, and you can get a lot of great trades off of that. And this is really to help out anybody that may be looking for a strategy. You're still new in the market, even if you're not new in the market, but something that you want to just find a way to get get into the flow of trading. Put your feet in the water, maybe dive in eventually. This is a way to do that. It's a great strategy. Like I said, a lot of professional traders use this strategy. Just a simple moving average on the charts. Now in another video, I'll go over what moving averages are more in depth. But for these videos, I just want to kind of go through the strategy, give you guys something to work with, so that you guys can go out there and really start having an edge in the market, being able to kind of know what you can do and what you can't do, being able where you can get in and can get out. It's kind of like, most of the things that we're thinking about as traders, like, art, is this the right entry point? When do I know to get out of this trade? How long do I hold, right? So this will help you with that as well. But in this video, I wanted to be able to go through another strategy in which you can use to heighten this actual strategy itself. So in this video, we're going to go over the double moving average strategy, right? We already have one moving average on the chart, right? And it's a 20 period, basically going back 20 days. We'll go into that in another video. So what we want to do is add another moving average on top of that. And what we're going to be looking for is the moving average cross over, right? And I want that as a 9. I want that as a 50 period, right? I want that as a 50 period moving average. Let's do something with the line. It's blue. I don't really want it blue, so let me just try to make it orange. No, that's too close to that. Let's make it blue. Let's tighten it up. There we go. Well, what? No, that's too close to the candle. Sorry, guys. Let me just get this together so that we're able to really see the difference in it. I can change it to green. There we go. We'll change it to green. That'll work. That'll work. All right. All right, guys. So basically with this strategy, we're basically looking for when the two moving averages cross below or above price, right? Now, once again, like I always say, we do not, when the moving averages are this tight and where they're this close right here, we do not trade that, guys. That, that's basically getting into consolidation. That's where prices are building up and accumulating, and this is where you see a lot of trap traders get stuck here. Okay, I'm going to buy here, and price goes back down, and then you're like, okay, I'm going to sell here, and the price goes up. You get what I'm saying? So what we're looking at is when price starts to actually move from here. One thing I'll tell you that I noticed in previous, when I used moving averages in my strategy, when you're looking for the volume in the market, right? You're looking where I guess you can say you're reading between the lines in the market. Moving averages are really good with doing that. What I used to notice was the space between them and price, right? So what we're basically looking for is a crossover here, right? This is where we got our cross, but we have price break above these two moving averages, right? Retest, and price shot up, right? And then what we're looking for, now you could still get out right here at this moving average close. You can still use that as part of the strategy to close out your trades. You don't have to wait for the next cross if you want to, maybe to capture more profit in your trades. You can just still get out with that single moving average which crosses over price, crosses over that moving average, and close your trade. And then basically what you're looking for again is the cross down. Now what we're looking for is, see right here, price came up, retest, touch, and this will be our entry point versus up top of this trend. Right now, like I like to explain this to you guys, that moving averages are what they call lagging indicators. So the data that's put out is usually comes out a little later than what you may be seeing, right? This is just to help you maybe really tighten up the strategy, being able to have a more confident based trading strategy, wherever the case may be. This will help you with that, because now you're just adding another moving average as a confirmation, right? The more confirmations you have, the better that is. I mean, the more things that are lined up or confluence that you have, the highly more probable your trade is going to be. So that's what we're looking for, guys. So that's why we added the other moving average. So instead of getting up in here, up top, we will be getting in here, right? And even if you still got in here, price still went down for 448 pips. You get what I'm saying? Right? So once again, when price comes up, we can still use the single moving average as a close, or we could wait to the cross. If you want to get more profit, use that as your close. All right, we're looking for a crossover, and then you're looking for the single close out, then that's your strategy, right? Write your rules down, follow your rules. Follow your rules, guys. Follow your rules. All right? If you follow your rules, you're going to be good, and you're going to be set in trading. You'll win a lot more versus trying to get in the market on the fly. All right? So definitely follow your rules. Whatever rule-based trading strategy, if it's this strategy, follow your rules. All right? All right, so I'm giving you 2 entry points and 2 exit points, right? So if you wanted to, let's say, you're getting, this is your cross, right? We're looking for the cross, we get in the market. But we can exit when the price crosses over the yellow line, right? Or over our 20 period moving average, right? That'll be our exit. So then we're waiting again for price to come in, and price comes up and it crosses. When we get in here, we want to retest, price to break below, and then once again we get into our trade, and we are selling the market once we see that entry point. And we're getting out as soon as that price breaks above the yellow line, which is technically on here would be still the 20 period, if I'm correct. That's my 20 period line, right? Now, every time prices close together, we're not trading this. We don't want this when the moving averages get real close. This is not what we're trading. This cross, we're not taking. Okay? That's tight. You don't really want to take that. I mean, you could if you wanted to. I'm not saying that you shouldn't, but I'm saying I wouldn't, right? And then what we're looking for is yet another cross, right? Up right here where I would take this trade. This would be the trade I would take, right? Off of it. Perfect. Retest, market pushes down right there. We're in profit. 267 pips. And this is GPB Audi, guys. All right. And if I'm correct, what we're looking at here looks like another cross happening, right? This would be the beginning of a trade if the market was open. I would be looking at for a buy, right? And it's just that simple. You follow these rules, you follow this rule-based trading strategy, and you're going to be good to go. All right. Yeah, you'll be good to go, guys. Like I said, we'll use those as our rules. The rule is simple. We're getting in whenever we see a cross. This is the double moving average strategy. So we're looking at the cross versus just a single cross, versus price breaking above or below the single moving average. In this strategy, we're looking at the fact the two moving averages crossing and price being above those cross points, right? Or below, right? That's what we're looking for. Above for a buy, below for a sell. But we're also looking for space and volume between the moving averages. This indicates volume right here. You see the space between the moving averages? When it gets close and really condensed, you can see there's not much volume being traded there. We're looking at that as well. That's another key factor in this strategy, right? It's really easy because it's kind of in front of you. So what you're looking at is I got this cross and I see how far away the two moving averages are pushing from each other. This is a good trade that I could probably get in and really get the market behind me or going for me. And that's a great way to trade because then you're setting yourself up to really serve the current of the market. You want to go with the current of the market, not against it. And this will help you to be able to simplify the strategy itself. And a little bit more of an advanced way of doing it because now you have the cross involved, right? We're going to go through another strategy that's going to use 3 moving averages. So I want to go through this series and show you how to use these tools that you've been given. Even though the indicators are not really just depend on the indicator itself, but just the fact of the mechanics of it, right? This is giving you a set of rules, a set of goals to set for yourself and to follow. What I found in trading is that the more you follow your rules, the rules that you have set up for your trades, whether it's the way you get in the trade or get out the trade, the way you're looking for your setups, you tend to be more profitable because of that. Because when you don't have any rules, you allow your emotion to control and to basically dictate when you get in and out of a trade, right? So you might see the market move and try to get in, and it's really a false breakout. And now because you got in based off of emotion, now you're in that trade and you didn't really follow your rules at all. Well, your rules could have told you, all right, I'm waiting for a retest. Once it comes back and retest, I'm looking for a confirmation candle in that direction, right? Now, you see that after you're already in this trade, and you're like, man, if I would have just waited or follow my rules, then I would have been on the winning side of that. And this kind of gives you that idea. It kind of gives you a structure, right? I'm sharing this with you guys to give you a structure, a way of trading and having a way of teaching yourself to follow the rules of it, right? Have a strategy, follow those rules. It doesn't matter if it's not this strategy, whatever strategy you have for yourself, guys, follow your rules. Your rules are important to you, right? They're important to keep your emotions in check when you're trading, all right? Emotions are very important, all right? Because emotion could mess up your trading day really quick, all right? So this helps you get in the market, be able to have some kind of confidence in what you're doing in trading, all right? So with that being said, this is the double moving average strategy, right? And we're looking at using the crossover on this strategy, right? I hope this has helped you guys. Please let me know what other videos you would like to see us record. Like, subscribe, press the notification button, support the channel and what we're doing here. Our goal is just to help as many traders as we can. If we can help millions and millions of traders learn to be profitable in the market, then we've done our job. We've done our duty to our fellow traders, and we want to be that person, be that community that helps out. Go over to Facebook, like us and follow us on Facebook as well, and then ask for the invite to the group. And with that being said, this is Richard Williams Jr. from Profits of Forex, where trading is simplified.